the mutual fund industry saw a sharp increase in new investors starting from FY20. While there has been a big Gen Z wave, you know who contributed the most to it? The Millennials. Millennials, also known as Gen Y, are the ones born between 1981 to 1996. A report by CII CAMS shows 84.8 lakh new millennials joined the mutual fund community. 1.54 crore SIP registrations were from this age group, 1.03 lakh crore of gross inflows, and AUM addition of 96,425 crore rupees. And 26% of these millennials were women. Between FY19 and FY23, totally 1.57 crore new investors joined the mutual fund industry, and 54% of them were millennials. And of the total SIPs, which stood at 5.34 crores, 29% came in from the millennials. Now, how has this segment grown in the last 5 years? We saw a big influx of investors in the mutual fund industry due to the pandemic. FY19 saw an addition of 29 lakhs. This actually fell to 21.2 lakh in FY20. FY21 was similar. FY22 saw a big jump at 48 lakh, and FY23 continued with additional investors despite the market volatility. Millennials continued to be the bigger contributor here, anywhere between 51% to as high as 57% in FY20. Actually, their share peaked at 57% in FY20. Even among the millennials, the number of investors born between 1991 and 1996, that has steadily increased over the 5-year period. Out of all the millennials who have entered the MF industry, 50% are born between 91 to 96, 30% between 1986 to 1990, and the rest in earlier years. Now, interest in making the first investment in equity funds intensified in FY20 and FY23, even though the market rally peaked in FY21. So, as a category, equity continued to be the flavor, commanding 90% share in FY23, followed by debt at 3% and other categories at 6%. So, if we map the preference for equity funds, it has seen a sharp increase from FY21 to FY23. The pandemic period could have made them a little cautious. The record performance of the market in FY21 may have made the millennials more interested in FY22 and FY23 to put in money there. Whether this continues or not, we'll have to track. Now, that's about the asset class. But what about schemes? Millennial investors preferred thematic funds the most in recent times. Preference started with large cap funds in FY19, but that share came off to 7% versus 20% earlier, and flexi cap funds increased from 7% to 21%. Small cap funds, flexi cap funds, ELSS also found interest within millennials. The other schemes and their share are slotted for you on the screen as well. Now, most millennials prefer the SIP route. 73% in FY19, which fell in FY20 and FY21 to as low as 56%, as markets saw more inflows via lump sum investments. This is when markets were doing really well. Now, this increased again to 72%, that is the SIP flow in FY23, as investors looked at steady investments spread over longer periods due to volatility. Now, the maximum number of millennials entered at lower slabs of less than 1,000 and between 1,000 to 5,000 when it came to investments. This is understandable, right? But 22% of the total investors invested more than 2,000 rupees. This is via the SIP route. And while one might think that do-it-yourself or DIY investing is the new cool, 95% of millennial investors did this via distributors or agents. While there have been account additions and investments, there have been huge redemptions as well. Out of the 1.57 crore SIP registrations, 57 lakhs that has been cancelled, which is around 37% cancellation. And 17.6 lakh investors made full redemption, 68% of them with gains and 32% made losses on their investments.